Kathryn, thanks for joining us. How would you typify the most recent period?
Morning. 2024 was a strong year for us. You said we increased our adjusted profits by 5%. Underpinning that was a really impressive 19% increase in our asset management profits to 289 million, with a 3 percentage point reduction in the cost-to-income ratio. We're also reigniting our life business and delivered nearly £1 billion of BPAs. Importantly, we finished last year at the highest ever solvency ratio since our listing in 2019. We hit our upgraded 2.7 billion operating capital generation target, and we also reduced leverage to 33%. We increased our cost target for the group to 230 million for the second time. And this really is all about delivering better customer outcomes. And so today, really importantly, we're giving two new targets to the market. We're increasing our AOP growth target to 5% over the next few years. And we're also giving a 2.7 billion new capital generation target. And this really does support our confidence in our decision today to move to a progressive dividend policy. So they're great results, and I'd like to thank all my colleagues for helping to produce these numbers.
And that's the round robin, and thank you very much indeed for talking us through all the numbers as well. Look, the problem at the tail end of last year was the withdrawal of funds from customers as well. Can you update us on whether you're still seeing withdrawals?
The UK market has seen some withdrawals impacting the UK institutional segment. However, we've been very pleased with what we've been doing to diversify the business and to grow internationally. Our asset management AUM outside of the UK is up 50%. Since 2020, now standing at £90 billion. And that's a core part of our strategy and also our strategy of growing in private markets. So we're actually quite pleased with what we're doing on the flow side. And we expect in the new external environment, too, that we'll see more demand for our flagship PruFund product, which delivered 6.6% returns and is a smooth product, well suited for today's volatile times. So we're quite confident around our flow picture and our momentum in the business as we look into 2025.
And that's great, and I take on board fully what you're saying about UK versus the rest, but net, the figure in the first half of the year was negative 1.5 billion. What's the full year figure, Kathryn?
Well, we reduced outflows by a half in the second half of last year. So overall for asset management, we had 0.9 billion of outflows for the full year. But really importantly, those outflows reduced materially in the second half. And I would call out our wholesale franchise. We had net flows, which, as you'll know, is a pretty good outcome for the wholesale business. And actually, our really strong investment performance, we had 25% of our wholesale mutual funds in the top decile, including both European equity and our strong fixed income range as well.